before we move on to the topic of cash book itself, let's look at a few things that we'd be using very often, or the few terms that we'd be using very often. First of all, we know that cash that we have, it can be cash that we are holding personally in hand, like in physical form, or it would be the cash that is kept in the bank account. They'd both be recorded in the cash book. One thing. The other thing is that the cash that we have at bank, how can we withdraw or make transactions from that cash? We've got a debit card. Debit card is a card. If I do the transaction using the debit card, it would deduct the amount from my existing bank account. So this is the difference between debit card and credit card. For debit card, I need to have an account with the bank. As long as I've got cash in that particular account, this card will work. Whenever I swipe this card or do a transaction, it would deduct the amount from my actual account. Whereas for the credit card, it's sort of this company is allowing me credit. Okay, I'm borrowing from them. So that is how credit cards and debit cards differ. For the debit cards, if there are transactions, they would be recorded in the business in the way that we'll have a credit bank entry. The amount will be deducted from the bank. So similarly, we have now internet banking that we use very often to make online purchases and purchases mostly. All right. Then there is this concept of direct debit. Direct debit is sometimes you allow certain companies. So, for example, I have a website, and for that website, I've allowed them that every this date, every year, they have to collect a subscription fee. So, I've given them my bank account details, and they do that directly from my bank. So, the bank it direct my bank account is directly debited. So, one more thing to understand: my bank account for me it is an asset. So when I debit the bank account, it means my bank account is increasing. And when I credit the bank account, it means my bank account is decreasing. For the bank itself, my bank account is a liability because I've given them this money in their trust and they have to give me back this money when I ask for it. Do you get that? So, so look over here. I have a bank account. Bank account. How much money would be there in my bank account? Name a figure. All right, $100,000. ठीक है जी. Acha, this would be an asset for me, this bank account, right? Because I've given this money to the bank and I can withdraw this money from the bank whenever I need it. The same bank account, when I go to the bank, name a bank, let's say Barclays. ठीक है जी. If I have this bank account in Barclays, for Barclays, this same bank account, this $100,000 is a liability because it's not their money, it's the money that they owe me whenever I ask for it. It's my money that I've placed with them, right? So for Barclays, this would be a liability. Acha ji, personally, if I do the accounting, I will show the debit transactions to show an increase in the bank account, and I'll do the credit transactions to show a decrease in the bank account, right? However, if you notice when you get a bank statement, first of all, it begins with a credit balance. So credit balance on the bank statement means that you have a positive bank balance. Why is it credit balance? Because it's liability for the bank. So bank is giving me this bank statement from its perspective that they have this liability of 100,000 that they owe me, sort of. Okay. And then whenever I deposit money with the bank, the liability that the bank has towards me that would increase, right? So my deposits in my bank account, they are shown as credit transactions. And my withdrawals from my bank account, they are shown as debit transactions. So my deposits would be shown as credit and my withdrawals would be shown as debit in the bank statement. So this is something that we have to understand, that for our books we do accounting in a mirror image way, the way bank is doing the recording for those transactions. Make sense? Acha ji. This. Acha, so direct debits is, so when I say direct debit, it means that I'm allowing the bank to make payments to these accounts whenever they ask for it. So I've already told my bank that at this date he might ask for this much money. So if that person does, give him this much money. That would be a direct debit. Okay. Sometimes the term also used or a similar term is standing order. So standing order is that I have told them, I've ordered the bank that every this date, give that particular party this much money. Acha ji. Then there is this system of clearing. Acha, for clearing, let's hold that for a bit. First, we'll do checks and then. Acha, for banks, there are a few types of account. First of all, there is current account. Current account is that all the money that I've given to the bank, this $100,000, I can withdraw it whenever I want it. All of it, partially, whatever amount I want to withdraw out of it, I can do that. That is the current account. And usually for current account, bank does not pay interest. It was historically, nowadays even on current account they pay interest. Got it? Acha ji. The next thing is that after current account we have got this type of account which is called savings account. So savings account is that this account you're using as a mode of savings, and obviously savings, if you have placed some money as savings, you won't be withdrawing out of it very often. So the understanding, so the direction of the bank is that you can make withdrawals from this particular account up to a particular limit. So let's say my monthly limit is $20,000 monthly limit. As for security purposes, I can have a limit on the current account as well. But other than that, if I personally show up at the bank and present a check, I can withdraw all this money. For the debit card, I might have a limit on the current account as well. For savings account, no matter what, they'll say that the maximum withdrawal you can make is up to this amount. And beyond that, the money, it would stay with the bank. And now the bank, it would start paying me interest. Okay. Uh, After savings account could be a type of, or we can separately show a bank account as the time as a type deposit accounts. Deposit accounts are usually the ones in which we deposit money with the bank, and then we say, here is the money. It would stay with you for, let's say, 3 months period. So I won't be allowed to withdraw money at all out of this deposit account for 3 months. And now the interest rate for this would be even higher. The return, the return that I'm getting on this money that I've deposited with banks, since the bank has the surety that for this 3 months I won't be withdrawing this money at all. As a reward, they would pay me a slightly better interest rate on this account. So now you understand what's the difference between current account, savings account, and deposit account. I just mentioned, for example, 3 months. It could be 6 months. It could be 1 year. And obviously, the more the time that I am keeping this money as a fixed deposit with the bank will have to compensate me with a higher interest rate. Otherwise, why else would I put money? I mean, block my own money for a longer period of time. Acha ji. Then we have got check. Check, we understand these are the instruments which allow us to withdraw money from our bank account. We know checks, there is this checkbook. On the left hand side, there are these tabs on which I can note down the summarized details of the amounts I am withdrawing, so that later, and this is the part that I'll cut and deposit with the bank. I'll have to write the amount in numbers. I'll have to write the amount in words, and I'll have to write to whom this bank is going to pay. So a few things that I can mention over here. So for example, if I write bearer, or if I write self, or if I write cash, these three words, they would denote that whoever holds the check, they go to the bank, they present this check, and they'll be given the cash, whoever that happens to be. Okay. However, if I write over here the name of the person, it would only be given to that particular person. Okay. Or it could be that it could then only be deposited in that person's account. Also, we have got this crossed check. if I put double line on a check, now there are checkbooks which have all the, let's say I can put these double lines anywhere, but obviously it's more obvious if I put on top of this, like right in the middle. This would mean no person can encash this check. It can only be deposited in a bank account. Okay, the cross check, it cannot be encashed, it can only be deposited in a particular bank account. And obviously if I write name of a person as well along with the double line, it would mean that only in the bank account of this particular person can this check be deposited and nowhere else. Acha, for the pay, if I leave it blank as well, even that would mean that the bearer of the check, whoever that happens to be, they can encash the check. And obviously I have to write my signatures a few places. For example, even when I go to present the check, the bank may ask me for verification purposes to sign it once more. I mean, that all depends. Acha, there is this thing of check endorsements and check crossings. This is some things that you would perhaps study in commerce if you take that as a subject. These are called, there is a term used which is called negotiable instruments. ठीक है जी. There is a whole breadth of detail on what negotiable instruments are. Just to give you a short idea, there is this concept of endorsements. So if you have an instrument, and if you have that instrument in your name, one method of using that instrument is that you withdraw money from that instrument and then pay another person. Another way it could be that you just write name of this other person and hand them this instrument as a payment. Okay, so that is how roughly how currency also came into existence. So initially you had just gold and silver coins which you'd use for payments. And then we said that instead of these gold coins and silvers, we'll have these receipts which represent certain golds and coins. So the idea was that if I'm right now in Riyadh and I have to go to Cairo and buy something over there, it's hassle to carry all these coins with me, and also it's dangerous. So a safer thing perhaps to do is to deposit my gold with someone who has their business here in Riyadh. So I give them all this gold, and in return they give me this receipt and they tell me that I've got my setup in Cairo as well. You go to Cairo, you give them this receipt, they'll give you this much worth of gold. Okay. So once I got to Cairo, one option is obviously that I extract all the gold and then make the payment of whatever purchases I'm going to make. The other option is that I simply give that other person from whom I'm buying the goods just this receipt. That is how currency notes they came into existence, and obviously now it has become a lot more sophisticated. The assets that are there at the back, even if they exist or not, that's a whole story that we'll study in economics money portion. Anyhow, moving on, the other instrument that we have is this pay in slip. Pay in slip is simply the slip that you fill in when you're depositing money in any particular bank account. So you mention how much money you're depositing, what sort of currency, notes or coins of what denomination, $100 bills, $50 bills, $20 bills, $10 bills, what are the bills and what's their number, and how do they make the total amount. And then you sign the instrument and you write the details of the account in which you are going to deposit this. So this is what a pay in slip is. Have you ever been to bank and deposited money in a bank account? Have you ever seen your father encashing a check? Have you ever seen your father making payment to someone via check? Uh, Nowadays, obviously, all these financial transactions, they have become a lot easier. So, internet banking, obviously, that has been a solution to all of these hassles that we previously faced for banking. Acha, the next thing is, if I am in HBL, okay, somebody, they gave me a check, and this check I have got my bank account in. I have got my bank account in Mizan Bank, and somebody gives me a check of HBL. So I go to Mizan Bank, I fill the pay-in slip, and I give them this check that this is what I want to deposit in my Mizan Bank account. They would tell me that fine, this money, it would be deposited maybe 3 days from now, 4 days from now. So what's happening in that time is, first what Mizan Bank will have to do is they'll have to contact HBL, that we have been presented with a check of this amount of this account holder in your bank account. Does he have this much money in his bank account? So once they confirm, then at the end of the day or at the end of some time period, they'll, previously it used to be that they used to physically sit down in a place, and they'd have that, okay, these many people of HBL, they have given checks to Mizan Bank account holders, and these many people of Mizan Bank account holders, they have given checks to HBL. So what's the net sum that each bank, one of the bank, it owes the other? So, for example, Mizan Bank, it received dollar 200 checks of HBL, and HBL, it received dollar 450 checks of Mizan Bank. So the net result is Mizan Bank, it owes dollar 250 to HBL, right? ठीक है जी. So they'll make this payment, and for the remaining account holders, they'll just deposit money in their bank accounts. So this whole procedure, which I've simplified a lot, this is called clearing. Nowadays, obviously, we have got sophisticated systems and electronic transactions which facilitate it, but the system of clearing, it's still happening, albeit it's being done electronically. Acha. So this is clearing of checks. That is why if you present check of the same bank, it takes less time, because for their own bank, they can check in a quicker way whether this person has got money in their bank account, and then collect money from his bank account and deposit in yours. However, for the other bank, obviously it makes sense that it will take them a relatively longer period of time to check whether that person has money in his bank account, and then to get that money from that particular bank and deposit it in yours. Obviously, they aren't getting the money in physical form, but to check and to verify this whole procedure, it takes some time. So that's the process of clearing.